Hey traders, this is Matt from zenandtheartofTrading.com, and today I'm just going to run you through how I'm going to update you on how my analysis played out over the past couple of weeks from the analysis I did in previous videos. I'll play a couple of clips from last week to demonstrate a bit of the process that I go through and how I identified these important levels. We'll just review what happened because I don't need to draw any new levels in. So if you want to see how I decided to pick these levels, just go back and watch those videos. But I'll play you a quick clip from last week on Euro Yen when we were doing this. Price was moving lower from this zone. So that doesn't leave us with much structure to reference, but that'll do. That'll do. I'll be very surprised if price doesn't respond from this zone. You can see even traditional 14 period RSI, we're heavily oversold here. So expect a bounce out of this pair from this zone. I'd expect a double bottom of some kind, maybe a little poke lower, wipe out some more longs before it heads higher, but we'll see. Do we have RSI divergence? Probably. Yeah, you can see here the RSI made quite a significant lower low and then a much higher high here. So this zone is probably going to act as support next week, but we'll wait and see what happens there. Now, as you can see, price did react from this zone impressively. So we had a 230 pip bounce from this zone to the letter. I mean, we tested this 121 zone by 16 pips. We went over 18 pips. So that just goes to demonstrate the accuracy of this method of performing top-down analysis to identify significant structure levels in the markets. Now, after price bounced off this level, it also struggled at this level, and we went into a bit of a trend continuation play. The trend on this time frame is bearish. We're making lower lows, lower highs. Even though we got this big wick here, I'm mostly ignoring that. So anything happening in between this wick might as well be, this might as well just be a free fall zone. So now that we've had this huge reaction off this 121 level, I am expecting I'm expecting a double bottom of some kind to occur in here and a bit of consolidation before we move lower, just because especially after this big wick out of this zone. You can see there's buyers down here. Sellers are taking profits down here, and counter trend buyers are looking to buy this. So we'll see who wins, the buyers or the sellers. But I'll just throw on the RSI real quick. Look, we got pretty significant RSI divergence coming in. So if price makes an equal low here and the RSI makes a higher low, I mean, that can be a pretty convincing signal that price is going to struggle to move lower. Doesn't mean it's bullish, doesn't mean we're going to have some huge bounce out of this market, but does mean that should just be mindful that buyers are showing their head down in this zone. So be careful going short down here. Basically, I don't trade structure yet. I'm still backtesting a bunch of strategies and setups I'm working on. But if I were to trade structure, I'd need a pretty conservative entry reason down here, since this is a counter trend zone. But the way I use these levels is because I trade the 15-minute chart and the 1-hour chart. I didn't take this setup in here, which was valid, because I need a 2-to-1 move before I can take my profit, and that 2-to-1 move put my profit order down well below this support zone. So, as far as intraday trading goes, it's not a good idea to be trying to take your targets past one of these zones because, yeah, they're quite powerful. They can stop price in its tracks pretty easily. depending on the context of the markets. Now, the most important question is, I mean, who cares that I'm right about this? I mean, that's mostly luck, to be honest. I mean, you watch a lot of professional traders that often get things right like this. Not every time, but often. And who cares? Why do you care that I know how to read the markets? This is about teaching you how to read it. So let's just break this down. Why did I put this line here at 121? I'll just hide everything for a moment. And we'll just go back to, well, first of all, there's no price action. No price action support structure and any kind of reference points looking left for many years, or not many years, two or 3 years from this point. So I'll go back to here. This is the zone I was looking at. Now, the reason I put my structure support zone at 121 here is because if I put this line here, you'll see we've got one bullish test here, one very bearish rejection here, bullish test, bearish rejection, bearish rejection, period of consolidation followed by a breakout. This is an important level where my mouse is right now, this horizontal line. And if I turn this off, that's where I drew this line in. And now, yeah, so this is a multiply tested, I think that's a word, multiply tested structure support zone, or structure zone. It's acted as support and resistance multiple times. When you see that happening, and you find a level like this that's just very clean, even handle number, 121. Yeah, this is a significant level of support. Same with this level here, if price ever gets down here, but this is quite a big gap. So, price will put up a battle here, I'm fairly certain, at 121, because if it fails at 121, it's we're going to fall like 200, we're going to fall 250 pips, which is a big move for most currency pairs. So yeah, there'll be some fighting going on here. We'll wait and see who wins, but I'm ultimately bearish on this pair because we got lower highs, lower lows, but in the short term, I'm expecting some consolidation, so this price action here doesn't excite me too much. I did catch a couple of trading opportunities in this move lower from after this rejection. I got a couple of short opportunities on intraday time frame on this pair, particularly on the 15-minute time frame, but I'm pretty sure none of them won, and they all broke even. So you can't, that's the thing with this analysis. This analysis contextualizes where the market is and what's likely to happen next, but capitalizing and exploiting that information profitably and consistently is a whole nother story. So it may look like magic when you see these support and resistance zones holding, but when you actually go to try to trade them, it can be quite difficult. So if you want to learn more about strategy development and combining market conditions with strict rules for entry reasons, so that you can backtest and develop a genuine edge over the markets, then look up Stephen Hart on YouTube. He runs thetradingchannel.net. I learned pretty much everything I know from him, and yeah, this stuff works, guys. And I'm just a regular old dude just trying to share some of the information that I've picked up over the years that's worked for me, because this is great stuff. I mean, it's really fun when you see price respecting these levels and you can trade off them and you're making consistent money. It's the best feeling in the world. So yeah, that's trading. Consistency, predictive analysis, discipline, and strict rules that limit your actions in the markets so that you're not over trading, you're not taking suboptimal trades, and you want the edge in your favor. Anyway, that's a bit of a rant. That's this pair done. We're bouncing around between these two significant levels. I'm not going to move this level at the moment, even though this rejection happened a bit higher. What I would probably do in this sort of situation is just draw a zone in, maybe from the low of these candle bodies down to the wick, and there you go. You got a pretty comprehensive resistance zone through here. If price gets back up there, same with this support zone. You could draw in a little zone down here like that, you know, a few pips either side. And yeah, we'll wait and see. This is a fair bit of buying coming out of this zone. So yeah, I am expecting consolidation on this time frame. I mean, that's a pretty big buy candle there. I'm not sure what happened there. It's probably news. All right, so moving on. Let's see what happened to US CAD, because US CAD did not respect my analysis last. Well, it did, but I was a little wrong on my call. If you remember, I'll play a clip from last week, so you know I'm transparent about what I said. So you can see the price is really having a hard time getting out of this zone. We've now had 3 candles close below the high of this high of the zone. So that's not a great sign, but we are holding above 135 even, this blue line, as support, as you'd expect out of this pair. There'll be a lot of traders watching this zone expecting it to act as support, because that's typically what happens in a trending market. You know, we've got higher lows coming in. Market is bullish. We just had a break and close, breakout above the highs of this long range. I mean, this range has been going on since over a month. So this is a significant range. So as soon as we get a break and close above the range, there's going to be a lot of buy strategies triggered, and they'll be looking to buy it up out of this zone, because you know, if it falls back within this range, then the breakout's failed. And yeah, so we're going to see a lot of buying going on in this zone. I was bullish on this pair, even after this big, quite obvious in hindsight, rejection, failed breakout wick. I was still anticipating price moving higher, just because we had higher lows coming in and higher highs coming in. And we were above this moving average, and we were holding it as support quite convincingly pretty much for most of this year. So I was expecting a move even higher on this pair, but we just didn't get it. After this big rejection candle, I should have called this, you know, in hindsight. It's pretty obvious. This is a failed breakout. You know, if I draw in a line here, well, not that type, this type at this high, you can see none of these candles closed above the high of the range, technically speaking. And that's a classic sign of a failed breakout. You know, price moved higher than this, took out a lot of stop losses, triggered a lot of buy orders, and then the market reverses. And we have this huge bearish engulfing candle that closes right back into the 50% mark of this range. That's a pretty convincing sign that the breakout's failed completely, and price is either going to continue to consolidate or completely reverse. What happened next? We did not find support on this moving average. We actually just blew straight through it, closed below it. When this happened, I was actually quite bearish. I think I took some short trades in here. I think I actually made a little money off those trades. I think I only got 1 target wins. I haven't had a lot of big winners since my last video. I was on a bit of a hot streak then, and now it's cooled off a bit. I'm still at new equity highs for the year, so I'm chugging along, but just nothing spectacular. I think last week I made 2% on my capital, but it's better than losing money, let me tell you. So anyway, what happened? Well, boom. I love it. You know, if I'd been more clued on, a little more focused when I was doing my analysis and observing this, and noticed that price hadn't closed above this wick, and I thought, if I thought more about what this means, I might have been able to call this move. But I was surprised by this move. I didn't anticipate price getting this far down. But anything can happen in the market, so it's not like I was bewildered. It's not like I went long up here and didn't have a stop loss because I was so convinced that price was going to move higher. You know, I know, you know, the markets will humble the crap out of you, which is a good thing, I think. It's made me a better trader, to be honest. But yeah, I didn't call this move, and even if I had, you know, it's not a big deal. It's about consistency, not being right all the time. But anyway, we did find support down here. I found this interesting. We did move a little lower than these wicks. This is a pretty huge support zone. I don't like having support zones this big. But if we just have a look real quick, you see price did find support down here. Yet again, we failed to close below this wick. And then we had a pretty significant pop out of this market. Big jump. I caught a long trade yesterday. In here, price was holding above the 50-day moving average. I saw this candle here was a test and a rejection off that. So on this day here, I actually caught this little pop on a 1 hour time frame. I went long. I got a better entry on this candle, but I was being conservative because price had moved down and nearly stopped out this trade, this setup. But this setup met my rules, so I went long from down here, and the better entry put my target around here, and I was just barely filled for a 1 target winner. Then price rolled over, stopped me out for break even last night. But that's the entry candle I was looking at, if you're confused. But I did not enter on that candle. I entered quite late on this candle after I realized we were getting a bit of a head and shoulders pattern here. Not that I trade them, but it was just extra compliments. This signal was, I should take it. You know, we got a bullish flag pattern forming. I think I had it drawn in like this. And it was testing multiple highs. You know, this high, these highs. And then we got this nice clean breakout, but again, the breakout failed and we just rolled over. Now we're back below the moving average. We've broken back below this low. So this is a potential reversal situation. We could come back down into this blue zone. We'll see. We'll see. This is still looking pretty bullish to me. We could get these setups that I'm trading, these pullback setups, they're very fractal in nature, which meaning that they apply on all time frames, all markets. Some markets are better for this strategy than others. Some markets consolidate more than others, some trend more than others, some have more momentum than others. So you got to be mindful of that. But look, this bearish engulfing candle would have been a nice winning trade. Swing high engulfing candle. If we get a bullish engulfing candle above this moving average, that could be a sign that we are actually going to move quite a bit higher. You can see price struggled to break through this resistance zone. That's where we struggled. So I won't be taking any more long trades on the 1 hour time frame until we break above this high. But I am open to taking, or my rules say I can take a short trade if we start to make even lower highs and lower lows out of this. So if we get a little pop out of this market, say we come up and test the EMA and we roll over and make another lower low, then I'll be looking for short trades. I mean, even if we get a move up to this moving average and we get I get a signal, I'll take it if it's valid, because we've already violated structure in the trend. If you see this, price moved up to here, we had a retracement, then we moved up, broke this high. So this support zone is the next, the last line of defense in this bullish trend, and it's been taken out. Price took out this last line of defense, which this is a trend reversal pattern. It is extremely likely that we will either reverse momentum completely, come down into this zone, or we will start to consolidate between this range for a bit and it'll get a bit choppy. But now that the trend's gone on this time frame, we're in consolidation / potential reversal. So I'll just have to wait and see how this pans out. If price gets below this 4 hour 50 moving average, then yeah, we've got to watch out for a test of this previous resistance in trend on this time frame, the 4 hour time frame. This will be a significant level. So yeah, I don't know. We'll wait and see. The beauty of trading multiple time frames is I might be able to catch a move between these levels. You know, if I get an engulfing candle entry up here, you know, there's plenty of room to catch a move down to this previous resistance, even if that's as far as price goes. So anyway, that's enough about that pair. Let's move on to euro dollar, I think. Yes. Okay. Now, this is getting pretty messy. Very interesting. I've left these zones in. I haven't touched them since the last few videos. I'll play a clip from last week explaining what I thought might happen here. I was a little off on this. I was right. I was half right. But half right in trading is not ideal. Often it means you lost money, even though the market went where you thought it would. In this case, I didn't. I don't think I've lost any trades on this pair over the past 2 weeks. What am I expecting on this pair going forward? Probably a bit of chop around here, consolidation.
It's possible we continue to form lower highs and then eventually break through this zone. And it's also possible that we continue to flatten out and then pop above this trend line and come up into the 112.5s.
What happened here? Price came down into this key support level at 111.2. We had one bottom, big bounce. Struggled at this resistance zone a couple times here. Came back down, retested this zone. Huge bounce out of there, big wick. This is when I was saying last week that this had changed my bias a little bit. I didn't say I was necessarily very bullish on this pair, but I knew that trend continuation was now off the table. We weren't gonna go lower than this low. There was a very, 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 very low chance of that happening after this move, this price action candle pattern. Clear double bottom. Yeah, I was convinced we were at least coming up to 112.5. I did not anticipate price getting all the way up to 135, but yeah, that's why it's best to trade price action, trade what you see, not trade what you think is going to happen. Trade what you see. My trading plan, my rules get me involved in this move, even if I'm not expecting it. If I get a valid trade, I just take it. I don't question it. I just take it. I didn't happen to get any valid trades riding this move up, because you can see it was just a big chop fest. I was away from my computer when this setup happened. By the time I got to my computer, this setup was already stopped out by this candle, so I never got an entry reason to go long on this move up. And then price went higher, failed at 135, so we got a bit of not a double top, although maybe barely, I don't know, pretty close to a double top if you include this wick. Whatever happened, we failed to make a higher high, and then we made a lower low than this low. I'll just draw this in and make it easier for you to see. We came up here, boom, boom, failed to make a higher high. Then what did we do? Boom, we make a lower low. The classic reversal sign. I did not go short here because this is an old version of my indicator, but my new version of my pullback indicator invalidates engulfing candles with rejection wicks that are larger than double the size of the body. Fortunately, I didn't catch this move. The reason why is because these particular setups have a much lower chance of winning than say this type of cleaner setup. But even bad setups win occasionally. So in this case, this setup did win, and that was a bit frustrating for me. I did try to take this trade, but you can see because of this candle has no wick, I don't chase the market. Even if I wouldn't even chase this trade, even if I had to enter 1 pip late. I need to be filled at the close of this candle or higher, because otherwise it skews my risk reward and it throws out the probabilities of my targets being hit, and it just gets messy. So I didn't get a chance to enter this trade because the market didn't retrace at all, but that's okay. I haven't had any trading opportunities on this time frame since then. So moving on, what has happened and what is likely to happen next? Well, price has broken out of this trend line very convincingly. I mean, it's not the cleanest trend line in the world, because you could put this anywhere. That's the problem with trend lines; they're so subjective. But no matter where you put this trend line, it's been broken. This price action broke out, and we're retesting the other side of this zone, which is interesting. The reason I have this trend line drawn in here and not higher or lower is because this is the spot that gets the most amount of touches. 1, 2, 3, 4, 5, 6. 6 touches of this trend line. We've broken through it very impulsively, and we've retested it twice. We're making our second retest on this trend line now. We've got a little bit of structure, a little shelf in here of structure, support, previous resistance that could turn support in here. It's not the cleanest. It's not the cleanest zone, but given the fact that we have this trend line in confluence, and we've just broken higher out of this range, it's quite bullish. It's quite bullish. I'm not expecting a huge move out of this pair, but I'm not so convinced that we're coming down to this blue zone. I think we might chop around in the middle here and head a little higher, and then who knows what will happen. Maybe we'll retest these highs or this resistance zone in here and then move lower. I'm not really sure. It's hard to tell what's going to happen on this market. But that's a pretty big weekly buy candle there after this little cluster of rejection wicks. You see there's just no momentum in this market to the downside anymore. I mean, even since the start of halfway through last year, we've just trickled lower on the higher time frames. And we've come into if we were to go down to the daily, this would be a significant zone of support. That's why I have this blue line in. So yeah, we'll see. I think it's very possible that we could come up and test this 50-week moving average. We could see price come all the way up into 114 or even a little higher. I wouldn't expect it to get higher than 115 over the next few months because the trend is still bearish and there's a lot of doubt, uncertainty surrounding the euro situation with Brexit and all that stuff going on. So until that's resolved, I just don't see a lot of strength coming into this market. But in saying that, often when all the bad news is priced in, it doesn't take much for price to reverse trend because everyone's already priced in the worst. So as soon as we get any sign of remotely positive news, you can get big moves like this as sellers take profits. I'd expect a little more chop out of this market. There's not really a clear trend here. This is a potential bullish reversal situation unfolding on this time frame, but until we get a higher low and another higher high, this is not a bullish trend. It's just an interesting situation to watch unfold. I won't be taking any trades on this pair unless we get a break and close below this low and a valid pullback entry, or I doubt I'm going to get a valid pullback entry in this zone here because I would need price to pull back and put in a signal that has a wick higher than this wick, but also doesn't close above the 50 moving average. And I think, judging by the look of price action right now, we're probably going to get a similar situation like this where we just kind of go sideways and poke above the 50 moving average, invalidating my setup for this particular move, and I'll have to wait for another break and close below there. For longs, I do not want to be getting long anywhere below this where price dropped from this zone. I mean, if price gets back up into here, there's a pretty high chance that we'll see some kind of bearish reaction. So going long here, absolutely not. Until really we get a break and close above this red line, I'm probably not going to be going long because we're in a bearish. The bears have control of price right now, and yeah, unless we get a break and close below these lows and a pullback, that could be interesting, especially if we retest this trend line from the other side. Who knows? But you can see price is struggling to go lower, so I'm expecting a pop out of this market today and tomorrow before the weekend. But we'll see. There's a fair bit of news on the way, so that's going to be interesting. There's going to be a bit of movement before the weekend. Moving on, Aussie yen. This was great. This pair. It was reluctant to respect my analysis, but it respected it nonetheless. If you see here, the last few weeks we'd gotten this. In my last video, I was discussing how we'd gotten this break and close below this support zone. Huge shift in bias when something like this happens. I mean, there is nothing more important, as far as I'm concerned, in the markets than a support level or resistance level that is this obvious and this significant looking left to be broken. When this is broken, that's a major milestone event. You need to pay attention when that happens. This is telling you that price really, really wants to move lower. Immediately following this, we got what made me concerned that we were seeing a false breakout because we retraced back into the range. But after this candle here, this daily candle, rejection candle that occurred in the highs of the range before this break and close below the range, this is where I started to think that, okay, we're going to probably see a follow through. This isn't a false breakout after all. This is just a sharp retracement immediately following the breakout. And you'll see once price gets back below this zone, it's all over. The bears have control
and we're coming down probably to this next support zone, but it's hard to tell. I'll just really quickly drop down the 4-hour time frame because this is important. Because there's no structure on the daily in this huge wick, I like to pay attention to the next time frame down that has structure. And in this case, this is a 4-hour chart, and the bodies of this move here are also going to be significant, especially on intraday time frames. So yeah, when the daily chart got down there, you'll see last night we had a test of this zone and a rejection. So it's possible we'll see a retracement back up into these lows. It's very possible. In fact, I'd say it's likely. This pin bar rejection candle at 74 even and a 4-hour structure support zone. We're probably going to see a bit of relief here, a bit of retracement. This isn't the strongest trend, and we are fairly oversold here. I mean, there's a lot more red candles here than green candles. That can't go on forever, so eventually we're going to see probably a decent relief rally, something like this kind of move out of here, But I don't know if now is the time, so we're probably going to see a shallow retracement and then a move even lower, but we'll see. I did catch a couple trades in here. I caught this move here. It was a 1-target winner. That's it, man. That's it. Bearish on this pair, going to move lower, but we'll probably have a retracement from this 4-hour support zone. What else is there to say? That's it. I'll start covering other pairs soon, probably. But for now, I'll just stick to these 4 because this process can be applied to any currency pair. Yeah, that's it. I could do this for all these pairs. And the key is not doing this, but combining this with entry reasons. So you'll see here's a good entry reason. Bearish engulfing candle at resistance. You go short at the close of the candle. Stop loss 1 ATR 84.6 pips above the high. Around there. Look at that. Perfect stop loss placement because you want your stop loss. If your stop loss if price never gets close to your stop loss, then your stop loss is too wide. But if price often comes close to your stop loss but doesn't hit it, that's optimized stop loss placement because you're getting the most out of the trade. You're taking on as much risk as is responsible and ideal. But yeah, there you go. Look, these levels are just great. So yeah, that's it for this week. I apologize for not going into more detail. I'm going to do another video soon. These are just videos just breaking down my process, what I do and why I do it. I will, when I get time, I'll create some more educational videos that go over the step-by-step process of doing this. I'll explain why it's important in more detail, and I'll demonstrate how to create actual strategies out of this stuff. I should mention real quick that if you're interested in learning more about how I trade or trading in general, check out my website, zenintheartoftrading.com. On there I have my Forex trading journal, where I break down every single trade I take each week and each month. I do a monthly review and a weekly review. Just to give you a quick example, there's my equity curve for the year. I write a little bit about what I'm experiencing, what I'm going through, what I'm focusing on at the moment. And then I break down each trade, time I took it, what strategy I used, the result, whether or not it was a good or bad trade. And you can see the screenshots of each trade and how they played out here. Yeah, and this is great for new traders to follow along. You learn a lot from this. This is how I learn from my trading mentor. He does a similar thing. He does a video review each week of his trades, which I might start doing at some point when I get better at this. But yeah, in the meantime, if you're interested, yeah, check that out. I've got a lot of other stuff on here. I've got a bunch of articles on how to trade and then some tips. I've got all my free indicators that you'll see me using in these videos, such as my pullback indicator, the RSI swing signal indicator that I mentioned. I also have a video library you can check out. And on this page, I've put up pretty much every single YouTube video or interview or documentary about trading that I've found valuable or interesting in my trading journey. Thanks for watching, guys. If you want more information, visit my website. And until next time, be consistent with your analysis, be even more consistent with your execution, be even more consistent with your risk management. and continue journaling. Keep looking for statistical patterns in your trading, looking for things that you can remove to improve your trading or add to improve your trading, be it filters, stop loss movement, or optimization. There's just so many ways you can be constantly improving your trading that if you're not consistently profitable, there's no excuse for not putting in the work. There's plenty of work for all traders to be doing on improving their process. So keep at it. You'll get there. It takes time. But yeah, focus on consistency above all else and be disciplined. And good luck. I'll speak to you soon. Goodbye.